Good Monday to everybody. Last week's stock markets were up about 1.6% on a huge earnings week. We had over 20% of the S&P 500 report already. Also, the markets were a little choppy, but that was a lot due to the Trump administration just churning out stuff every day. I mean, I got to tell you, it's a tough job being a reporter that has to go in for press releases in this Trump administration because they're called in all the time, not like the previous administration. So that says a lot to do with what's going on with the markets. I think the markets are starting to digest the tariff information. As we come in this morning, we see the markets popped on the news today. Commodities last week were mixed. So crude oil was actually 3% last week, while gold was up about 2.5%. I do see a change in crude coming. I think it's really, we're beating this drum that the crude oil market is just going to head lower throughout the next several years. And while I do agree fundamentally we're going to start seeing more crude flowing out of the U.S. because of policy changes, I do think that this summer we should expect crude to move a little higher. We'll get into that as well. And Bitcoin, here's an interesting fact. Bitcoin notched its 10th time that it crossed above the 100,000 mark. How many times did it cross over other marks, like, say, the 10,000 mark, the 50,000 mark, etc.? Well, you'd be surprised to see it, but they've crossed over quite a bit. I would imagine we have to hit that double. We have to, there's an average that Bitcoin might have to go up above 100,000 20 times before it stays because of what we've seen happening with 100, with 1,000, with 10,000. These are huge, huge numbers that we're seeing. I'm also hearing some information that, and you may have already heard this, Michael Saylor went in, bought more Bitcoin, spent hundreds of millions of dollars on more Bitcoin, pushed it back above 97 earlier this morning. And there was some talk that the OTC market is going to run out. I think it was they're running low on coins. So you know what happens when supply dries up. If supply dries up, then demand, even if it stays the same, is going to increase the cost. We will see. There's some things they'll have to do to try to resupply. One of them is buy, and if they have to buy, price is going up. But there's some other things they might do as well. Okay, let's take a look at some charts here real quick. And I'm going to start with SPY. And as you can see here, SPY, what I've done here is a candlestick chart. And you can see the dotted lines. These are trend lines. I've got the bottom trend line that starts all the way back here in September before the election. Here's the November 5th election. But the SPY was already on, SP 500, already on an uptrend. All right, higher highs, higher lows. Where are we right now coming into today? Got a little consolidation. Today will be a breakout day, at least for the morning. We'll see where the rest of the day takes us. But getting above the highs of January really puts us up into this area, which is around the 620, I want to say 623 to around 635. That's the area that we see happening. It could be a slow trog up, meaning a lot of jagged moves with higher lows and higher highs as we get into May, because so much has already happened, not since the fourth quarter of the year, but even the beginning of the year, trying to push back above these all-time highs. I've got a cautionary area if we go below the lows of the year, down here around 575. All right, TLT, this is the bond index. Exact inverse move as what we see in the stock market. So it's interesting because this chart going lower says that interest rates are going higher, but it looks like the market has digested a lot of that in. And it isn't so much that rates are going higher, it's so much that the cuts seem to be less and less. Now, in the last month, we've seen a bottom around 85 on the bond market. We've gone up to around 90. Again, we'll see where this goes, this downtrend line. If we break that downtrend line, that means more money is going to flow into bonds, and we could see those rate cuts, liquidity coming into the market. I think that's good for the stock market. Bonds going up is good for stocks. Bonds going down, especially below 85, and I think we have some trouble there. All right, UUP. I wanted to show you the double dollar index. This is what the U.S. dollar is doing, and it did get repriced toward the end of 2025, but we're stuck in this trading range right now between let's call it 29.20 and about 29.70. You get above 29.70, and the dollar gets stiff against foreign currencies. I think that's a negative on the market. I think if the dollar stays where it is or it actually goes lower, fantastic, positive move for the market. So dollar higher, market lower, dollar lower, market higher. Crude oil. Well, speaking of crude, this is where we are right now. We've pulled back from 85 down to below 75. I mean, what we see is that there is a slight possibility of oil making new highs, but I think it's very slight because I think the fundamentals are going to weigh on the price of oil. But the technicals suggest that we could go into summer with the summer demand, push oil back to around $80, right? From 75 to 80. If we drop down a little bit more, you could definitely say there's a chance that we go 10% higher between now and mid-summer. That's oil. And then finally, let's take a look. Well, let's summarize here what we're looking at for the week. There's still a lot of earnings yet to come out. The next few weeks, we got retail that still has to happen. Some stocks that I'm looking at on my radar still have earnings coming out, not for another 30 to 40 days. I'm talking about like the companies like Dollar Tree, Dollar General, and these are on my radar because they're going to get expensive. These options are going to get expensive, but still lots to come out. Michael Saylor's acquiring more Bitcoin. What's that say for Coinbase, which is reporting real soon? And then, of course, the Eagles win. Let me tell you this. There is this big thing that's been running around. Most people are not pattern traders. But, when you hear something like, if the Eagles win, the market's going to crash, and we have data going back 100 years. Wait a minute. The NFL hasn't been around for 100 years. So where's that data coming from? Oh, it's coming from all Eagle sports or all Philadelphia sports. Listen, there's not enough data to prove that if the Eagles win, the market's going to crash. In fact, I think that the opposite has occurred because so many people have thought about this theory that it could be an inverse market indicator.